Good morning, everyone, and welcome to the European crossover webinar. And we're starting off at a holiday weekend with the Memorial Day holiday here in the U.S. So we're going to catch up on a couple of headlines that we're pressuring the euro. We're seeing the euro trying to come a little bit off of its lows here. Let's go on and move into that screen. One moment. Well, saying here, Italian bond opens 3 to 4 basis points higher, 10-year yield higher, and this is on Italy. Salvini says the EU could impose a $3 billion euro fine on Italy for excessive debt use. And he said, with all my energies, I will fight the outdated EU rules. Now, we know that this has been one of the things that he's been arguing about, and we're seeing here the Bund at this point shows here June Bund yields hit a new 2.5-year low of 0.155% as Italy debt tensions with the EU resurface. So that's actually kind of started out the morning with a little bit of a dip here, and you'll take a look right here with the Bunds. Really making another push here as once again, as I mentioned, with the Bunds under pressure in the sense that rates continue to fall back with the whole issue with Italian debt. We're going to move back into the main screen, so be one moment. Okay, and as I mentioned, we're seeing the euro just trying to gain a little bit off of this area here. As I said, we started a little bit under pressure. That's been the theme of this morning. At this point, as I mentioned, we were out for the long holiday weekend here in the States. But as we return back, we're seeing the dollar yen come a little bit under pressure. We'll go on and cover everything. Obviously, like I said, for right now, we'll just start out with a little bit of news. And then we're going and go into our analysis. We know that at the beginning of the week, we always have our Asian analysis to go on and get an idea where we think we're going to go to across all the different pairs, and we're going to get into that. Let's go on and take a look at the news, though, to kind of get a little bit of a flavor of where we're at right now. So moving into the morning bid, today starts one of the world's longest and least transparent job selection processes as European leaders meet in Brussels for a first discussion on filling the EU's top post from the head of the European Commission to the European Central Bank. Actually, suitability for the jobs in question is just one factor. Candidates will be ranked, discarded, or retained according to their political affiliation, and even whether they'll come from a big or small country, along more usual diversity criteria. Ultimately, the choice for one position may be largely reflect a compromise linked to an appointment decision elsewhere. Angela Merkel has argued that the next president of the powerful European Commission, in effect the bloc's executive body, may be the main candidate of the party that came on top of the European Parliament elections. That would be the German conservative Manfred Weber. But it's unlikely to be that simple. Francis Emmanuel Macron disagrees with that method and issued a statement with Spain's Pedro Sanchez saying the new batch of top roles should reflect the majority of the new parliament, that for the first time is to be split among a broad alliance of parties that are all pro-EU but very divergent views of politics, conservatives, social democrats, liberals, and greens. Let the horse trading begin. As debate around Britain's exit from the EU radicalizes around discussion of a new deal departure and how to stop it. A survey of this morning shows that the Brexit uncertainty has already helped New York overtake London as the world's perceived preeminent financial center. A survey of 180 financial executives by consultant Duff & Phelps found just over half of the respondents now see New York as the world's top financial center, up from 10% from 2018, while 36% see London as the leader, down 17% from the last year. The survey also noted that Dublin, Frankfurt, and Luxembourg also fared better this year as the European Union's financial industry searches for a new hub. On the stock markets, world markets pushed higher on Tuesday as London and New York traders joined the fray after long weekends that saw relatively benign European parliamentary election results, hopes of the further Chinese policy stimulus, and speculation about a mega merger between automakers Fiat, Chrysler, and Renault, keeping a lid on things on further saber rattling on trade wars from the U.S. President Trump, who's visiting Japan, and anxiety about a standoff between Italy and the European Commission over European Union budget rules and right-wing governing coalition party. The League topped the poll in Italy's European election results. Overall, the all-country index was 0.15% higher after gains of 35 tenths on Monday, with one eye on Chinese A shares joining the indices from today. European stocks also looked set to add to Monday's gains. The exception jumping in support was Italy's League, where rhetoric challenging an EU budget sanction has gone up several gears, as Deputy Prime Minister Matteo Salvini said on Tuesday he would use all energies to fight with the call outdated EU rules. A decision on next steps is expected to June 5th. Euro-dollar slipped back till around 11.80 around Friday's closing levels. 10-year Greek bond yields firmed up, plunging as low as 0.3 on Monday for the first time. The yield spread between Greece and Italy narrowed as low as 60 basis points at one stage. And let's go and move on. Australian dollar gets a break and eyes iron ore antics. The Australian and New Zealand dollars were becalmed on Tuesday amid full economic data and a lack of fresh news on global trade. The Aussie drew some support from a brainstorming run by Australia's biggest export earner. Iron ore futures are traded in China jumped as much as 6% on Monday to a contract equivalent to around 111 tons. Commodities analysts noted a squeeze on supplies that sent stocks of iron ore held at Chinese ports fall sharply in recent months. The chance that iron ore could breach the $100 barrier was also in the cards following the supply disruptions. Supply and demand factors are not aligned enough to justify the outcome for a little while longer. The windfall to Australian miners is all the greater as the Aussie is so much weaker than the last price boom. Now with Aussie around 69, a price of 111 is worth 160 Aussie dollars, not from the all-time peaks. The boost to export earnings is already delivered through the largest three monthly trade surpluses. Normally such strength would tend to lift the Aussie, but in this case it's been offset by a sharpening widening in wide spreads that favor the U.S. dollar. Likewise, markets are almost priced in for a rate cut from the RBA next week, while the Federal Reserve is seen on hold for some months yet. And the dollar rose against its major peers on Tuesday, as investors awaited new trading catalysts. The yen was in a holding pattern as Trump is visiting Japan. Many of the currencies pairs hugged recent ranges. Activity overnight was thinned out with stock exchanges in the U.S. and Britain closed for holidays. The euro struggled following remarks from the currency bloc. The European Union Commission is likely to start disciplinary steps against Italy on June the 5th over the country's rising debt. Let's see, there's a polarization in European Parliament, which is kind of a representation of the overall European political situation, said Masafumi Yamamoto. Yamamoto says the news of a possible disciplinary steps against Italy over the national debt could hurt the euro or did hurt the euro, though the market reaction was limited to the U.S. and U.K. holidays. Japan Economic Prime Minister Motegi said on Tuesday U.S. President's comment could probably reflected his hopes for a quick progress in negotiations. Let me see. While it's positive there is some time for solving the U.S.-Japan trade issue, that doesn't mean the problem has been resolved, said Ishikawa, senior analyst. Ishikawa said it remained hard for investors to take on risk due to the yet-to-be-resolved trade negotiations between the U.S. and China. So with that, let's go and move into the pairs. That kind of gives us a little bit of a lay of the land of where we stand right now. Okay, let's just go on and get into the data. Be one moment. So with the euro, let's go and pop that in here on the daily. So the euro successfully defended the 1130 level. A daily close above 1222 will send the market to 1280 with a potential target of 1334. Dips back to 1165 will bear an opportunity, will allow bears an opportunity to cover and bulls a chance to add to positions. So down to 1165. We did see a move down to 1175 so far. Looking here on the 2-hour chart, we did have our trend line. We posted that. And we did run out of gas. I think at the time we are looking for what, 1216? 12, well, actually 1220. We look at the trend line was 1216. We said we decided to go with 1220. That's right here. But the trend line we said was 16. So we got up to 15 and then at 1220 and we kind of rotated a little bit lower, but we're kind of holding our own here. We did see the dip this morning, obviously with the issues with Italy. We said any moves back down to 1165 will be an opportunity for bears to cover and bulls to add on. They were already bullish to add on. So we'll stay with that. We're going to go with 1165. Keep it fairly tight. There you go, 1165. Resistance. There you go. We'll go with 1220 for today. 1220. It's right here. And let's go on and move into the cable. Cable manager close above 2,700. Initial support is 2,660. And we're just below that. 26 initial support is 2660, followed by 2590, which is a 78%. A daily close above 2733 allows for a test of 2825. So we said we had, and that was coming in from this weekend, going into Monday. Obviously, today's Tuesday. We had 2660, followed by 2590. Let's go and take a little bit closer look what we stay here on the 2-hour. And I'll go right here with this 2644 level. So it's going to be our support for today. Well, we'll stay with this 2644 right now. And we talked about that 2733, and we're gonna go with this on this right here with a daily close above 2733. That's going to be our resistance. So going to the Aussie dollar. The Aussie dollar's held the 68.64, which is 78%. A short covering rally is possible to 69.97. Major resistance comes in at 70.27. Initial support is 68.80. Well, we're not getting too much of a pop, on the iron ore issue. And it looks pretty homely for right now, but we have it at 69.97. But with the RBA next week, it's hard for this thing to get much of a pop. Boy, it's going to have a tough time trying to even get beyond here. If they get this little bit of a pop, if they do, because of the issue with the iron ore, the resistance is going to come in right there. It's not even that much higher, but it would come in at 69.66. That's still a ways up in here. But if we do take out some stops here, it'll be 69.66. With support here, once again, the 68.80. We'll go 68.80. And that's what we had listed in here. So 68.80. Kiwi is attempting to break and secure a solid footing above the downtrend line. A daily close above 65.76 will confirm the bottom in place and allow for a test of we put in the 65.76 in here, but actually would allow a test up here to 66.56, which would be the 38%. So let's go on and go here. There we go. So if we can get this daily close above here, 65.76, that'll allow a test up here to 66.56 at 38%. So that's going to be our resistance here, 65.76, still trading relatively tight. And support being 65.17 right there. So let's go and mark that up. Well, this dollar cat is still trying to hang on here. But we put on here the elusive 35 level for the dollar cat has been just that, elusive. Somewhere along the line, I believe we've hit a trap. Somewhere along the line, I believe we will hit a trap door that can lead to 32.95 with a positive 33.45. Resistance remains the daily close above 35.04. So until we get past it for right now, and that's still a good 50, nearly 50 pips away, actually 50 pips away, that's going to be a resistance. I don't want to put it right here at this 34.78. It's just a little bit too close. I mean, if you're trying to, if you believe that the dollar is going to pull back, and certainly suggestions would indicate the dollar may go and see a bit of a dip in here. You can, if you want to tighten it up real quickly, would be looking around that 34.75, but realistically, it's 35.04 still. We may bounce around in there before we may see a dip back here with the dollar. It's still going to be bullish. And then as far as support, well, we think we're going to go and go lower, but for right now, this thing is still holding up relatively well. On a very short-term basis, support's going to be right there at 34.05. So even if we do break lower, you're going to see some people trying to pick it back up at 34.05 or cover. So we'll go with this for now, but we believe we will in turn go lower in time. And here's a dollar peso. Dollar peso remains mired just above the downtrend line, lacking momentum. Support is 18.92 with resistance at 19.23. That's a big run here, but you can see here we're just doing a whole bunch of nothing. Okay, we've broken this trend line, and you can see here we're just sitting there. We're not really moving to the downside, so there's just a lack of momentum. So really, we're just trapped within this 18.92 to this 19.23. And you can see when you look at here on the daily chart, there just isn't a whole lot here. If we want, we can take a look at a 2-hour chart to get a little bit closer look here. On a short-term basis, it's going to be right here at 19.11.6. We're not that far away for now. I'm thinking they can just get past that. This is where before we get to that 19.23.6, this is where the real resistance comes in, which is 19.14.2. At that point, you should see a little bit of a pushback. So right in here, you see that coming across, more resistance. On the downside, $18.99.5. Well, dollar yen is still weakening here, and we've hit that bias pivot down here. Let's pull this back. You can see the importance of this bias pivot right here. The dollar yen has returned to the pivot, 927. Next level of support is 875. The market's oversold on a short-term basis. Resistance is 1005. So we are oversold. Now, whether we can take it another stab below this pivot, the resistance level would come in right there, or support would come in at 875. We're oversold at this point. Now, it's just going to be a matter of, can they go on and make a stab and hold this 927? We are at the pivot. For the sake of support, if we do get a break lower, we'll be looking at that 875. There's a little bit more support here. Let's take a look here. Oh, it has to be this 875. So we'll go with 875. But be cautious here because we are at that pivot and the market's oversold on a short-term basis. Well, we talked about the 1005, but we're going to have to tighten it up a bit here. So let's take a look on the 2-hour. If we get that bounce, resistance would come in right there at 970. We are very oversold. Overall, I think we can go lower, but once again, we can see this market pop up a little bit. And onto the cash dollar index. The dollar index closed below the 97.89 after reclaiming the key weekly level. Thursday's U.S. manufacturing growth stumbled to a near-decade low, reigniting thoughts of a possible cut in the fall by the Fed that in turn undercut the buck's upside momentum. Initial support is 97.20 with a potential move to 96.63, which would be the 38%, confluent with the support level at 96.72. So this is what we're talking about here, down this 96.72, confluence in here with the 96.63. Well, on a short-term basis, I think the buck's actually doing okay holding here. I mean, I thought we may have already been dipping a little bit lower. So resistance right now is going to be that key 89 to meet right there. Let's see, leaning lower this one. Yeah, right there. Comes in 91, 92. But I think that 89 is that's that key week level, fairly formidable. So we're going to go with 97.89 for the support. I mean, not support, but resistance. there's going to be some support. We had this from last Friday. Let's just break that just a little bit lower right there. Go with 97.39. $97.39. I do think we're going to have to slide back here in the dollar. Now, I myself don't think it's going to come apart, but I felt that we'd have to slide back just to factor in what I think is important here, which is, once again, after that poor, very, very poor manufacturing, once again, it says close below 97.89 after reclaiming the weekly level. Thursday's U.S. manufacturing growth stumbled to a near-decade low. Lowest numbers we've seen since 2000, I think it's 2009. Reigniting thoughts of a possible cut in the fall by the Fed that did undercut the buck's upside momentum. So my thought is that, I mean, some are thinking that this might be it for the dollar. We may have a double top. I don't know. But you still have to factor in what the market's looking at. And what they're saying is, hey, look, you got to price in the possibility of a cut. If you see such piss poor manufacturing, the worst in a decade, then you have to factor that in. So, it's not like as if we're way down here. We're still way up here. So you factor in that cut, you got to see a break. And that's what we're thinking is the market may come down here to about the 96.70, 72 area here. But we'll see where we stand now. But for right now, I think we have to price in or factor in this market potentially moving lower. So I'm surprised it's even holding up here for right now. That might be part of the issues that Italy's having, or the Euro's having with Italian debt. So with that, let's go move into the cross rates. Downside momentum remains stalwart on a short-term basis. The market is targeting 70.98. Initial resistance is 72.33. The daily close of above 72.84 would curtail the downside. Well, we're just still continuing to push lower here. So we do have some support here at 71.45, but it looks like this is where we want to go to, 70.98. So that's what we're going to put in here. Resistance is going to be right there, 71.86. Euro yen is taking a bottom as multiple stabs below 22.50 have been defended. Well, we're back below 22.50. Initial resistance is 23.30 with the potential move to 2400. Confluence with 23.89. Well, right now the yen strengthening is where the markets is looking at right now. And even with the dollar yen, it's at 9.26. So we're just hovering at that pivot. So, we're looking like, okay, multiple stabs below 22.50 have not been. You can see here, here, here. But you know what? It's starting to slide back again right now. So potentially, if we do see that dip, we might, and right now, the dollar yen's at 9.25. We may see this move down here. We have to go with this one here, 21.95 right here. 21.95 here on the euro yen for support. You can see, pull this back. Right there. You see here? There's your 21.95. That's what we're going to lean on for the support. Let's take a look at resistance. For right now, it'd be there, 22.65. 22.65. Here comes the Aussie popping back up. Euro Aussie here after that dip. The euro has paused, unable to secure traction above 62.28. Aussie is indeed oversold. The market is susceptible to a pullback to 60.95 with initial support at 61.33. Don't get greedy on the downside as bulls remain well in control. So let's go and move into the 2-hour chart. So don't forget we have this little bit of an iron ore story. So it's giving the Aussie a little bit of extra pop back, but any dips back, as I mentioned, they're still in control. They're still in control here with the bulls are. So be wary. I mean, we've dipped back in here, but the bulls are still firmly in control. So my point is, don't overstay your welcome. You get these dips back, at least take some off the table if you're still inclined to be bearish. Resistance is going to be right here at 62, which is the 62 level, which is close to the uptrend line. So let's mark that off. Support. We mentioned the 60.95, but let's look right there. We just about got there too. Look at that. So it's going to be 61.33. And let's go move into the Euro Kiwi. Euro Kiwi is pulled back a bit from the major 71.31 level, confluence with 71.14, which is a 50%. The market remains stout, better opportunities elsewhere if one is bearishly inclined to euro. Well, this one is even more stronger even than the euro Aussie. That's what I'm saying. So if you're inclined to be bearish euro, you can probably pick out better opportunities than against here because this is still holding up very well here. So let's see here. Oh, we're still holding up very well here. Here's the 71.14, the 50%. Here's the 71.31. We'll keep it right here for 71.31 or stay with this major level as resistance. Support. Go right here with 70.35. Call 70.33. And let's go move into the Aussie Yen. Okay, the Aussie Yen is defending the 75.31 level, confluence with 75.56, which is the 50%. So that's where we're at right now at the 50%. A daily close above 76.09 will allow a test of 76.96. So 76.09 is going to be the resistance, 76.09. But right now for support, well, we're back here looking at this 75.31. Right back here again. So let's go with 75.31. And resistance 76.09. We're still pushing here. Let's go with sterling yen. Sterling yen is attempting to close off the bottom after is attempting to come off the bottom after a test of 38.50. Major resistance is 39.95. A daily close above 40.49 would signal a short-term bottom with a possible move to 41.23. Initial support is 38.73. Well, we're even below that right now because this again continues to be on the strengthening side. But here's this level right there. You can see that key, which is 38.20. So that's going to be our support here at 38.20. We're very, very close to it right now. Support, well, if we get things turned around, not support, but resistance. Quite a ways away, but that's where resistance would be 39.20. And let's finish up with the sterling odd. Sterling odd is closed below the 84.14 level, allowing for a slip back to 82.53. Initial support is 83.16. Resistance is 84.58. Well, let's take a little bit closer look. You can see here we've closed below the key 84.14. We're also breaking below the trend line. Little bit of resistance right there at 83.50. Let's take a look on a 2-hour chart. We'll go right there with 83. 83.62 for resistance. There's some minor support there, 87.25. I apologize. 82.75. We'll go with that 82.75 on a very short-term basis. And here's the bias chart. And going back to the main screen, you can see here the euro is trying to pick itself up a little bit. We did have that dip, as we mentioned, about the Italian debt woes. And you can see here the dollar index is starting to slip back. And I think the dollar index will continue to pare back because to me, the theme, as I mentioned, is going to be, as I put on here, Thursday's U.S. manufacturing growth stumbled to a near-decade low, reigniting the thoughts of a possible cut in the fall by the Fed that in turn undercut the buck's upside momentum. Whether you think it's going to cut or not, you have to factor that in. That piss-poor manufacturing low of numbers not seen since 2009, you can't ignore that. Whether you think the buck's going to come apart or not, you have to factor that into price. That's what the market's going to do. So my thinking is that we will end up paring back here in the dollar. And the euro, which came in a little bit of pressures now, is trying to push a little bit higher now. But that's where we stand. Thanks for joining us here on the European crossover webinar. We'll catch you on the wrap up a little bit later on today.